Aloha and welcome to this video. My name is Stan Cox. I'm the principal strategist and broker with SC Finance Strategies and Insurance Consultants. This video is about your retirement account. How's it performing? You know, this past year and a half it's been a good example of what happens generally in the stock market and how it affects investments. You see, back in February to March 2020, the market experienced a 30% drop in values overall. So if you had $100,000 in your 401k or other qualified retirement account, it dropped in value to $70,000, lost 30 grand. The market has since gained back about 50% from that low point, but that would only put your retirement account balance back to only $105,000. Was 100? Now it's only 105. So while the market has gained 50% since the low point of last year, it's only 5% from where it was before it lost that 30%. So think about that for a minute. If it hadn't lost that 30%, and then it went ahead and gained 50%, your account would be at $150,000, right? But that's not the reality. So when financial planners advise you, planners and advisors tell you, don't worry, you'll get all your money back. Just hold on. This is a long-term strategy. The part about getting all your money back just isn't true. You'll never get what was lost back. And then what happens when the market drops another 30 to 50%? It does this on a regular basis. So fast forward to retirement. When will that be for you? 5 years, 10 years, 20 years from now? What do you think tax rates will do between now and then? It's known that tax hikes are in the works right now, and no doubt more are coming. So when you do eventually start taking money from your retirement account, whatever is left of it after all the market bumps and drops, that will be taxed at whatever the increased rate is at the time you take those distributions. In the meantime, if you want to withdraw some of the money from those accounts, it'll be taxed, and you'll likely get hit with a 10% penalty on top of that. Because if you're not at least 59 and a half years old, that's what happens. You get taxed plus a 10% penalty. Not the cheeriest of thoughts now, but what happens if you should die? Does your retirement account have a death benefit that would be paid to your beneficiaries? No. Sure, the account balance may be paid to your beneficiaries, but nothing more. And whatever that is will be taxed. So here's the point. It might be a better idea to pay the current tax on the money that you put into a retirement savings account that you won't have to pay any tax, and especially at the higher rate, later in retirement. And where your savings is guaranteed to grow and not lose money, no matter what the stock market does. And that has a guaranteed death benefit that is greater than the total of all your savings, and that will not be taxed when paid out. So we have a video that we have posted also on this channel, and you can check that out. It's pay lower taxes or save taxes in retirement. So what about self-directed IRAs? How's that? Well, the only benefit as I see it is the deferring of tax on the money that you contribute to the IRA. But again, you're going to have to pay tax on it eventually. And that eventual tax rate is undoubtedly going to be higher than it is now. So how much of an advantage is that really? Instead, if you can place your retirement contribution in an account that pays you many times more than any bank savings account pays, including, I mean, CDs and IRAs are, I don't even want to talk about it right now. It's kind of sickening. And your money is guaranteed to grow without risk of loss. And you're able to leverage that money to direct wherever you want. And it comes with a high death benefit. Well, why wouldn't you take advantage of that account instead of an account that pays you your resting money nothing bank account? Has no death benefit and will have you paying a higher tax when you eventually start taking distributions in retirement. Enter the tax-free cash growth warehouse, or you could say the mother of all investment accounts. What is it? A tax-free cash growth warehouse is the cash value component of a properly designed, participating whole life insurance policy with a mutual provider that has a low policy loan interest, a high dividend interest, and a non-direct recognition policy. We have videos on all of those points as well: non-direct recognition, modified endowment contract, all those different things that play in. These accounts that I'm referring to, the tax-free cash growth warehouse accounts, pay high compounding dividend interest to your money, even while you have the money leveraged out for investments. The money you contribute to the account is already taxed, so it won't be taxed again. Your money in the account grows tax-free. You can leverage the cash in your account anytime, for any reason and anything. No penalties, no loss to fees, guaranteed growth with no risk of loss. Oh yeah, they come with a big death benefit that is also tax-free. I'm sure you can imagine some of the advantages and benefits that you would receive by utilizing a tax-free cash growth warehouse rather than a restrictive qualified retirement account, especially if you're doing real estate investments for fix and flips. So, I mean, or if, for example, if you own a business that has to replenish inventory on a regular basis, this strategy is perfect. Yeah, you actually truly multiply the power of your money because it's earning high dividend interest for you, saving you all the opportunity costs that you would be paying if you paid cash, or finance fees if you use financing in other ways. Become self-financing with a tax-free cash growth warehouse. It's the benefits and advantages are manyfold. And I have, as I mentioned, I have 2 books. The first one explains the strategy, what it is. The second book details 9 different actual applications, and they're client-based applications of utilizing the strategy and how it works. Tremendous benefits. Books are available on Amazon.com. You can also request a free copy of the PDF of my book from me at the link that I will provide in the description box below here. Also, if you like what you're learning here, if you like the video, please subscribe to this channel and leave your, post your comments and questions here as well, and I will definitely get back to you on that. We're here to help. That's what we do. That's why we do this. We're passionate about this because hardly anybody else is teaching this. Very few people are specialists in it. So anyway, look forward to hearing you. Hope you enjoyed this. For now, aloha and mahalo for watching.